All right, so now that you know how to get into the markets and probably how to get out of the markets, let's now go into country types. Where will you enter, or how will you enter? You know that you can be able to enter a trade. You know you can be able to come out of a trade, but where are you going to enter, and where are you going to come out? Right. So now I'm going to talk about entry types before we come out, and we'll talk about exit types. For exit is just one way. You just have to target one way, and that one is practically the simplest one I can talk about because that one depends on your risk management, on how you actually want to target your risk and other stuff in a day. So with that one, I think let's talk about this, right? So with risk entry, right? With risk entry, you have no confirmation, right? Price probably with that one, price has broken structure, or let's say in the upside or to the downside or to the upside, right? So price has broken structure. So you can see price has broken structure, price has broken structure, and now price is going back to in a pullback. So this one, for you to take a confirmation entry off of this, make sure price is following the trend. As I mentioned, it has broken structure. Make sure it has broken structure to the upside or to the downside on both sides, either buy or sell. And you're probably looking at price started falling back into like just in a very slow momentum, which you know that it's going to get a momentum to the downside. Same apply to the other side of the trend, right? Now, so risk entry, you don't have any confirmation. Is basically that you just have to refine other areas of it to be able to get into the markets. So with the risk entry, I have this typed out, this criteria. So these are the entry criteria for the risk entry. Let me copy this. Okay, disadvantages and advantages for risk entry. So let's put it right here. Okay, so let's use 20, paste. All right, so as we all can see, let me basically just let's arrange this. Okay, I think this is not needed. All right, this, and which one again? Yep, this, right, and also this. Great. So let's go to the disadvantages. We have this, basically this. All right. So this is risk entry. Okay. So this is basically risk entry criteria. This is risk entry criteria, and let's bring the other one, the confirmation entry criteria. It all has different types of entry criteria that you basically need to understand to succeed in this forex market. All this is very important in our day-in-day lives. So if you are not consistent in the forex market, how can you be consistent in if you're not consistent in your life, rather, how can you be consistent in the forex market? So hence why we need consistency everywhere. All right. Okay. Good. So now we have our risk entry and our. So let me just divide it by bringing down a line here. So we have our risk entry, and our. Alright, let's talk about the risk entry first. So the risk entry, the standards are identifying a point of interest on the higher time frame and use the lower time frame and use the lower time frame to it. What was I trying to write here? Okay, so you have to identify a point of interest. Okay, yes, to refine it, right? So this one you have to refine it. Okay. Where is it? To refine it. Okay, so after you have refined it into the lower time frame, which is shown with the gray line inside, so the high time frame POI is the blue one, and lower time frame POI is the the ash color, the gray color right here. Same apply to the buy entry. So you can see with this one it is very risky because you just do minimal refinement and then you have minimal confirmation. So it is mostly useful if the POI and the trade idea is with the trend. As I said, it has broken structure and you are having trend to push back. You are having to push back to the downside. And advantages of it is that you provide entries to trades that tap to the POI and run. So in this case, if let's say you have a POI, you wanted to have a confirmation entry, you might not get the confirmation entry. Price will just come and tap into it and go, and hence you miss the trade, right? But with the risk entry, you are able to be in the trade, and yeah. So and then it has high risk to reward ratio as well. So the risk entry, you also have high reward to risk ratio because you are refining it on the lower time frame. Okay, same apply to the buy and sell both. And the disadvantages of this one is that in case the confirmation by the trader will be limited, in this case the confirmation of the trader will be limited. Okay, you can be on the wrong side, hence get stopped out. So with this one, because you don't have any confirmation, you can easily get stopped out because you take a sell and maybe it was a buy, right? Because the trend hasn't given you a confirmation to go down yet and you've already entered. So if you have no confirmation, how do you know that the trend is going to the downside? So that one can also be very risky. That's why it is called risk entry, right? So let's know when to take risk entries and when to uh, um, and then when to do what, when to not take risk entries. As I mentioned, make sure it is with a trend, hence you can take it, right? If it gets stopped out, you know it was with a trend. Now let's come to confirmation entries. The standards is that identify a POI using the higher time frame and then refine it on the lower time frame if necessary, right? When price taps into the POI, go on the lower time frame and wait for the lower time frame break of structure overall. Okay, and wait for the lower time frame break of structure. Where is it? Which is the BOS. Okay, in favor of the POI and enter off of the newly created order block. So in this case, you have a POI on the higher time frame and price pushed to the downside aggressively. Now it starts creating higher highs and higher lows, higher highs and higher lows. Then it breaks the lower, the higher high, the higher low into making a lower low, right? In this case, now you are saying, oh, now that we have a lower low, we are looking for what, a higher high to take the trade to the downside. So now you have your order block that has already been refined on the lower time frame that will push price to the downside. Hence, that is why it is called what, the confirmation entry, because on the high time frame, you have a break of structure. Hence, why do you have the POI? On the lower time frame, you've gotten another break of structure. Hence, why you have a refined order block on that particular structure, which has given you confirmation that it's going to the downside or to the upside. This is applied on both sides, both sell and then buy scenarios. Now, it is best used when the OB, which is order block, in the lower time frame is, sorry, in the higher time frame rather, is huge. I'm trying to say the higher time frame in this case. Where is it? Okay, yeah. On the higher time frame is huge. So you can see that in this scenario, I've made it known. I've made the POI to be very big, right? So when it is very big, you might not like to have big stop losses. Let's say you have, let's say your account is not strong enough to hold this particular type of trade. You are likely to get stopped out, and hence the reason why we are always supposed to to find this type of trades on the lower time frame to get best entries. So best use when the OB in the order block in the higher time frame is huge, and when price is moving to your POI strongly, right? When it is huge and at the same time price is moving to your POI strongly, so you are supposed to look for confirmation entries, because you don't want to be caught up into price taking you out and continue and like price taking you out of the trade and then go to its known direction, right? So also best use when you are trading the counter trend and has to deal with multiple POIs. So while you're on the lower time frame, you have a lot of POIs that you have to deal with. Hence, you have to look for minimal. You have to look for confirmation entries. The advantages of this one is that you give the confirmation. It gives the confirmation and confidence prior to the trade entry, and also provides high risk to reward ratio. The RR means risk to reward ratio, as the POI is refined and executed on the lower time frame. So in this case, you have the POI on the higher time frame, but the other POI that gives you the order block is basically executed on the lower time frame, hence giving you a high risk to reward ratio, right? The disadvantages is that you are likely to miss a trade. Okay, missing a trade is very one of the obsessions you would not like to face. So you need to know when you are supposed to use a confirmation entry and when you are supposed to use a risk entry. Okay, and which will be coming into on the next episode. Okay, I'll be talking about it on the next episode, on how to know when to know how to know when to take a risk entry and when to take a confirmation entry, right? So in this, I have to be able to explain this for your understanding. I don't want to make my videos too long for you to watch and then get boring with it. I want to make it so short that you watch the video straight to the point and then you get used to the strategy very quick as we go into real and also long video recordings on Zooms, right? So mostly my Zoom calls are basically might not be recorded because I want the videos to be short. Watching the long videos might make you like you probably feel boring and other stuff. I'll try my best when the website is ready. That is where I'll start recording Zoom calls so that I have a place to put them, and more to the point, I don't want to put a lot of things on my computer, hence let it lag. Okay, but with all further ado, let's get into the next episode. Thanks for watching and see you guys in the next episode.